Hi, this is Mark Woodward, your straight shooting advisor, and welcome to my fourth quarter 2019 tactical brief. Now, as I predicted in the third quarter, the S&P 500, the NASDAQ, and the Dow Jones were all positive. If we peel back that onion, three defensive sectors actually led the charge, with real estate, consumer staples, and utilities outperforming by fairly significant margins. What that indicates to me is that investors are getting a little more concerned about a possible recession and moving their portfolios into defensive positions. Now, if we actually look at real GDP growth, that can give us a pretty good indicator of the health of the U.S. economy. Now, the government hasn't released their initial estimate on Q3 2019 real GDP growth, but according to one of the economists that I follow, there's enough data available for us to put together an educated guess. So if we factor in consumption growth, business investment growth, home spending, government spending, trade, and inventories, then Brian Westbury, the chief economist for First Trust, estimates that third quarter real GDP growth will come in at an annualized rate of 1.8%. Now, that is a slowdown from the second quarter's annualized GDP growth rate of 2%. But I do expect that a strong earnings season paired with progress on trade in the form of Congress dealing with the USMCA, which is the new NAFTA, and the U.S.-China trade talks will provide a backdrop for a better real GDP growth rate in the fourth quarter. This will allow the U.S. equity markets to finish up from where we ended the third quarter of this year. That's my prediction. Now, against this backdrop, in our accumulation models this quarter, there were no managers replaced due to our ongoing screening and selection process, no changes to our tactical allocation, and we rebalanced those portfolios in early October. In our EIG and trust portfolio models this quarter, I did have to consolidate our alternative sleeve into one manager, and I adjusted our tactical allocation by shifting more funds to a U.S. large cap ETF for better tax efficiency. In our ETF models this quarter, there were no manager replacements due to the ongoing screening and selection process, nor were there any changes or adjustments made to the tactical allocation model, and those portfolios were also rebalanced early October. If you have questions about your accounts specifically, please give me a call for a personal review, and remember, at KANA Private Wealth Group, we help you put your family first.